So you own 100 shares of a stock, and you know you can sell a cover call in it to collect some nice extra premium. But the question is, when is the right time to sell that cover call option? Too early and you cap your upside. Too late and you miss a lot of premium. In this video, I'm going to show you when is the exact right time to sell your cover calls so you can go with a clear plan instead of second guessing yourself. I'm going to demonstrate this for you by talking through a cover call position that I was in for several years. And in the end, you'll know exactly when is the right time to sell cover calls in any stock that you own. Here's the framework that helps me easily decide when is the right time to sell a cover call. First, and one of the most important, is you need to know where technical resistance is on your charts. When a stock is approaching resistance, as long as it appears that resistance is going to hold as resistance, that's generally a good time to sell a cover call. But a second important factor to consider when you're selling a cover call is dividends. And of course, it only applies if you're trading in a dividend-paying stock. But when dividends are approaching, you really want to keep an eye on the placement of that cover call strike price, because there's a whole strategy called dividend capture that's designed to grab those dividends from you. So you want to sell cover calls in such a way that the stock isn't grabbed away from you and you miss those dividends unless you're okay with that. Let's consider a situation where you own a dividend-paying stock and it's now approaching resistance, so you want to sell a cover call in it. However, the ex-dividend date is, let's just say, about 7 days away. What do you do? Well, you could just wait until after the ex-dividend date, or you could use that ex-dividend date to your advantage. You can sell that cover call strike price at or above resistance, and preferably out of the money if you didn't want the stock called away from you. But you want to place it at such a strike price, and I'll show you in just a minute how to do this, but you want to sell that cover call at such a strike price that if it were called away from you, you'd be very happy. But ex-dividend date is important to keep in mind, because remember, if the cover call option you sold has less extrinsic value than the value of that dividend, then the odds of that stock being called away from you before the ex-dividend date go way up. So we're at resistance, we get a dividend coming, we don't really want our stock called away from us, so we're going to sell that cover call out of the money at a spot we'd be happy if it was called away from us. That puts us in a win-win situation, which is how we always want to set ourselves up. You see, we win if we get to keep the stock because we've collected that cover call, we also get that dividend, but if it's called away from us and we don't get the dividend, we've sold it at a price that we're very happy to sell that stock in. Let's look at an example of this using Tyson. And we're just going to run some what-if scenarios here. So here we have the daily chart of Tyson. We do see that recently it has reached an area we expect it to find resistance, and in fact it has found resistance. We expected it because it found resistance right in here back in July, and also found support back in here in April. So we're at resistance, and resistance appears to be holding at this point. However, it does have the potential to break out because support also appears to be holding. I'm naturally drawn to this date right up in here, which is the next earnings date, because you always want to keep earnings in the back of your mind. Now let's check our ex-dividend date. And here you see my broker is saying that the next ex-dividend date is December 12th. And that's 3 months away. So I'm not really worried about the dividend unless I'm going to sell a cover call that expires after that December 1st date. All right, now back to our daily chart. And we're trying to decide where we're going to sell our cover call strike price at. Now I've zoomed way out here on this daily chart because I want you to see how important this area is. So around this $58 area, I showed you earlier it served as resistance, and again it's done that over the past several weeks. By going back, it served as resistance here, support, and resistance right in here. And if we go way back in here, one more resistance. So this is a very pivotal area. If it can push through this area, it's quite likely that it might run up in price. But right now it's still holding as resistance, and notice this red 200 moving average, it's also serving as resistance. But let's say I don't want this stock called away from me. What do I do here? Remember that Tyson's trading for around $57 per share. And remember that our resistance is around $58 per share. Let's pick us a cover call strike price. So one of the nice things about a company like Tyson that's highly traded is that there's plenty of strike prices to sell. Now, if we want to keep owning these shares, we definitely don't want to sell it in the money cover call unless we feel pretty strong that Tyson is about to come down in price. Now, if we believed it was about to come down in price, we might sell that $55 strike price cover call. We get nice premium for it, but part of that's because it's in the money. Notice extrinsic value here is only about $1.15 per share, which that's still pretty good extrinsic value. In fact, the annualized return is about 16%. But personally, if I want to keep owning the shares, I'm probably going to sell them at resistance or even above resistance, depending on how far out in time I'm going to go. Now, remember what I said that resistance point was? It was around $58 per share. So let's scroll up. The one closest to that is this $57.50 cover call. Now again, I don't really want to sell that one because that would be in the money based on its current resistance. And I don't want these shares called away from me. So if I definitely didn't want these shares called away from me, I'd probably look to sell at least the $60 strike price. So how much would that pay us? Well, if we go 46 days out, we look at the October 17th $60 cover call strike price, we get decent premium. We get about 60 cents per share. Now at return, it's about 7.67% just for the cover call premium. If you annualize that 60 cent per share premium, it would equate to about $4.76 per year if you're able to do the same trade every 46 days. So not bad on a pretty stable company like Tyson. But let's say you wanted to go farther out in time, or you wanted to collect more premium, or you just didn't want to trade every 46 days. Now let's move the expiration day forward to the January 16th expiration day. And now we got to start thinking about that dividend. Because remember, Tyson goes ex-dividend in early December. Now we don't have a December expiration yet, so we're having to look at the January expiration. And that option expires about 137 days. Now by going farther out in time, you also increase the odds the stock might be above that strike price because you're giving it more time to run. But if we were comfortable selling our Tyson shares at $60, we'll have to consider selling the $60 cover call that expires in January. Notice it too has nice premium. It would give you just under a 9% annualized return. In addition to that cover call premium, if it wasn't called away from us early, we also get the benefit of that 50-cent dividend because we would still own it on the ex-dividend date of December 1st. Now what would our return look like? We get about $2 for selling this January 16th cover call, but we also get that 50-cent dividend. So in all, as far as premium and dividends received over the next 137 days, we pocket about $2.50 per share. But we get something else. Remember, Tyson is trading for around $57 per share. So we also would get the benefit of Tyson going up in price to that $60 per share strike price. In all, if you do the math with the $2.50 that we get for the dividend and the cover call premium, as well as the stock price appreciation from about $56.88 up to $60, we would get about a $5.62 per share profit. And that's just over the next 137 days. And when you run the numbers to annualize the return, it's actually a pretty nice return. It's about a 26.3% annualized return for the 137 days that we'd be in this trade. Now, of course, keep in mind that if we sell that $60 strike price cover call, it could always be called away from us, but also maybe we get to receive the full benefit of that cover call premium early. So that should improve our return. The question now is, when should we sell this cover call? Well, it's at resistance now. So actually now might be a good time to do it. Because if it were to do what it did back in here, it might roll over and retest this area for support. So in my opinion, this actually would be a pretty good time to sell an out of the money cover call. Now if we want to be a little more safe, we might sell it even higher than 60. Because notice back in here, it found resistance around 62. So if we want to give ourselves some more room for Tyson to come up and we still keep our shares, we might consider selling this higher strike price cover call at $62.50 per share. Now let's just go back through the recent history with Tyson to kind of point out some times when it would have been a good time to sell a cover call and times when it would have been a bad time to sell a cover call. So we see it's been in a nice decline, but now it switches directions. And we have a nice new higher low right in here based on this low right in here. We have a nice new higher high based on this one. So now we know we've switched direction. We're no longer in a downtrend, we're in an uptrend. So we want to ride this trend. So we have a nice new higher low right in here, another nice new higher low right in here. Now we form some higher highs. Now we're rolling over. The question really is here, are we going to find support at this upward sloping trend line, which also coincides with the green 50 moving average? If it breaks that, then it might be a good time to sell a cover call. But if it bounces, then we're still in a nice uptrend. Well, fast forward a few days, we see that it did actually break that uptrend. It rode that green 50 moving average and this upward sloping trend line for support, then right in here it broke down. So in my opinion, once it broke that support, this day here would actually be a pretty good day to sell a cover call. And where would I sell it at? I'd probably sell it at least here, which would be around $67 per share. And depending on how far out you wanted to go, you could sell it 30 days, 60 days, or even farther out like you saw the example was that I shared with you earlier. All right, let's move our chart along here. Let's see when would not be a good time to sell it. So we see Tyson just kind of meandering sideways, finding support at this red 200 moving average, not finding higher lows or higher highs, just kind of trading sideways. Now, in my opinion, this probably isn't a good time to sell a cover call if you don't want your stock called away from you, because we don't really have a clear direction. If you just wanted to sell a cover call, you could, but I'd probably sell it right in here if I want to be aggressive around 61.5, or if I want to be safer, I'd be selling it up here for around $67.50 per share. Because that's clearly some resistance it found in the recent history. But in the near recent history, it found resistance around 61.5. All right, now let's fast forward and see what Tyson does next. Well, now it jumps overnight and it pushes through that area of resistance. So that resistance, you would now expect it to turn to what? Into support. That's what resistance does. Now our next area of resistance would be around the $67 area. So if I were selling a cover call, I definitely want it to be up here around $67.50 per share. There's another important line we want to consider here, and that's this previous support line. Because remember, support once broken through turns into resistance. So I can feel pretty safe that this area right in here It's a good resistance area because it found resistance right in here. But also up until this day, if it were to come up here, it'd be hitting up against this diagonal resistance as well. So that $67.5 area, I'd feel pretty good about selling a covered call at that area. So what does Tyson do next? Well, it comes up and finds resistance around that $65 area, so it never even really gets up to that $67.5 area. So far, that would have been a good strike price to say a covered call at. But then we see Tyson begins to decline, as you see here, and it's right back at that previous support area around 55. Now, is this a good time to sell a covered call? Well, in my mind, almost any time is a good time to sell a covered call. It's all about your placement. So where would I sell a covered call at this point? Well, I see it recently made a new lower low, which tells me there's weakness, and it's kind of traded sideways. Then I saw it jump up here. So this actually could be a good day to sell a covered call because it's also at resistance. You see it's finding resistance at the green 50 and red 200 moving average. But I do also see there's been 3 up green days and the volume is pretty high, just a little bit above average. So if I were to sell a covered call here, where would I sell it at? Well, I actually feel very comfortable selling it right in here around 65 because that's the previous area of resistance. Although it is at resistance now, I don't know if I'd feel comfortable selling a $60 strike price covered call if I didn't want my shares called away from me. And the reason for that is that big strong up candle this day. All right, so you pick. Before I fast forward the chart, which one would you pick? Would you sell the $60 covered call or the 65? I'll give you a second here. Okay, now let's keep moving. I see Tyson just kind of trades sideways, continues to find resistance around that $60 area, right at the red 200 moving average on this daily chart. But then it goes up and it finds resistance again at this area right in here, around $61.50. Again, if we sold that $65 strike price covered call, we're still in good shape. We've now had some time pass, so that covered call has probably turned into a complete win, or it's heading our way, even though the stock has gone against us when it comes to the covered call strike price. So at this point, if I wanted to sell a covered call, when should I sell it? Well, I'm actually okay selling it here, but I do want to keep in mind that we just formed a new higher low right in here. So if I want to sell a covered call, but I didn't want the shares called away from me, I definitely would not sell it at the money covered call because we're starting to look a little bit more bullish here. We're not bearish like we were in here, we're a little more bullish. Now notice these moving averages here. Whereas before was finding resistance at that red 200 moving average, now that has turned into support. So it's finding nice support there. But we're still finding resistance at that $65 area. In fact, below that $65 area. The resistance is around 62.5. So I'd still feel comfortable selling a $65 covered call at this time. Let's fast forward to see what Tyson does next. Well, now it kind of zigzags, shows strength, shows weakness, and we're kind of getting choppy in here. We're having big swings. Now we've broken down again. So this whole time I would have been fine with selling this $65 strike price covered call because that was the previous area of resistance. If I wanted to be safe, I'd go even higher than that. I'd go about the $67.5 covered call. But now something changed here. On this day right in here, we had a gap down. I don't remember why this happened. It could have been earnings, most likely was, or some news came out about Tyson. But we had a gap down. So now things have switched. We're finding nice support around 60, but now that area should turn into what? It should turn into resistance. So if I were to sell a covered call and I want to be kind of aggressive, I might consider selling that $60 covered call, whereas back in here this whole time, there's no way I would have sold that if I didn't want the shares called away from me. So if I want to be a little more aggressive, I'd sell the $60 covered call. If I want to be a little safer, I'd sell the $62.5 covered call. And as we advance this chart, we see Tyson continue to find resistance just above that $57.5 area or at that red 200 moving average on this daily chart. And that really takes us all the way to today. So where would I be willing to sell a covered call at today? Well, if I was okay with the shares being called away from me at $60 per share, I'd sell one today at $60. But if I definitely didn't want those shares called away from me, I'd probably sell it up here, just above this area right in here that served as resistance. Because we have resistance right in here, but it hasn't quite broken down yet. So that very well may be priming itself to go up in price. Now, it's not looking tremendously bullish because we are still trading under that red 200 moving average, but I want to prepare myself in case it were to push through there. By selling the $62.5 strike price cover call, that gives me room for it to push through the resistance at 60 and still get to keep my shares because I'm at the next level of resistance. If I'm okay with the stock being called away from me, I just sell it anytime at the price I'm willing to let it be called away from me. But if I don't want the shares called away from me, it's very important to time and to place your cover calls properly. If I don't want those shares called away from me, I want to sell my cover calls when I have a clearly defined resistance area. I also want to keep an eye on that ex-dividend date if it's a dividend paying stock, because that ex-dividend date will most likely affect the price of the stock. It will also greatly affect the odds that if that covered call goes in the money of the stock being called away from me early due to dividend capture. The next question is the premium worth it? I mean, if the stock is trading for 60 and we want to sell the $65 covered call that expires in 30 days and there's really no premium, is that really worth it? Well, you might just wait to see if the stock goes up in price. And if it doesn't, and it's a dividend paying stock, we just keep pocketing the dividends. If it's a non-dividend paying stock, then you just sit there and wait. But you have to decide if the premium is worth it. I have stock that I own right now that I could sell covered calls against, but I haven't. It's simply because there's not enough premium at the strike price covered call that I'm willing to sell that stock at. So I'm just going to sit there and wait. And that's one reason why I prefer to trade in dividend paying companies, because even though I'm not collecting covered call premium, I'm still collecting nice dividends. So premium is important. Make sure it's worth it. And then in the back of your mind, you always want to be prepared for if the stock were to go up and challenge that covered call strike price. There's always a possibility, as you saw with Tyson, which is a fairly stable company, the stock could gap up overnight and you might have to sell those shares at that covered call strike price if you don't do something about it. The next point to keep in mind is never sell a covered call without thinking through your target exit price. Don't just randomly sell a covered call just because you saw a premium you like. Make sure you're okay selling that stock at that covered call strike price. If you wouldn't be at least okay selling the stock at that covered call strike price, then consider a different game plan. Now, I have a whole video series dedicated to covered calls, so if you'd like some ideas on how to work covered calls, check out that video series. I think it'll really help you out. If you'd like to get alert whenever I buy stock or sell options like covered calls, and I do quite a few of them, consider the benefits of becoming a patron down at the link in the description below. If you want to see how I trade covered calls on my dividend stocks so I collect up to 9 times what they pay as a dividend, check out the video at the link above and the description below entitled 6x Your Dividend Income. Until next time, happy investing, and we'll see you again soon.